Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Good morning, and welcome to the IRS Solution Attorney Show. I'm your host, the IRS Solution Attorney, Darrin Mish.
And I'm your co-host, Katrina Madewell. Welcome to the show today.
How you doing, Katrina?
I'm doing great. How are you, Darrin?
Very good. We were chatting like right up to the last second where I came on here. So I think that means I'm starting to become kind of an old hand at radio.
That's always the case for me. And then Pat George will try to pop the mic on and catch me in the middle of conversation midstream.
You got to look at your peripheral vision and watch for the red light. If you see the red light, you're live.
Keep an eye on her.
No hot mics, no Donald Trump moments.
See, I think, well, you were talking a little more than me, so he didn't want to catch you. He's only after me. I got it.
Yeah, it's because the guys got to stick together here.
I'm going to be a good guy to her today, though, because she fed me this morning. I'm just going to go to sleep now. I have a nice full tummy.
So you're trying to see if I didn't bring you food, you would gang up on me and take Darrin's side? Is that what you're saying?
To the 10th power.
Oh, my gosh.
So what is it about radio, guys? And, you're always talking about food in the studio. I mean, that's pervasive across, different types of formats.
You ever seen our pay stubs?
Plus, they're on lockdown in these airtight rooms,
It could be.
Thank God you have a window, because you'd be like, oh, I don't know. No light, no sound.
We like it a food.
That's one of the things that's kind of unique to this studio, to this building, right? Is that there's at least windows on one side
Yes.
of the hallway here, which is kind of nice because I've been in other radio stations and, they're not always like
Yes.
that. It's usually like a claustrophobic sort of cave.
Big closet, big dark closet.
Unless you were at the other
started.
station that we were at where
Yes.
it was like there was dogs running around and barking and stuff.
Oh, that station in between, yes.
I worked at a radio station once. There was a nice big window on an open field, and I worked at night.
That's like creepy.
You cannot see out at night, but they sure can see in. So the first thing I would do, I would tack up with thumbtacks a sheet over that window, because I just know nowadays it would have been that clown looking.
Just thinking of scary clown.
Scary clown.
Oh my gosh. Oh.
Where did the clowns come from anyway?
I don't know.
Who's sending the clowns?
But I had a client in my car yesterday, and we were talking about this with another agent that was shadowing me. And I said, they were talking about somebody driving along the road and they stop, and this clown was in front of them. And I'm like, I wouldn't stop. I would just keep driving. The clown would be run over.
Dead clown.
I mean, if you're dumb enough to come out with a costume and a mask in the middle of the night by the woods and go in front of my car, you're going to get run over.
I don't know how many are going to be coming to the door trying to get candy, because I don't think they're going to get anything.
Don't go to Darrin's house.
Go to his house, they're going to get chicken eggs.
Trick or treat. My chicken just laid this. Oh, my gosh.
By the way, if you cut lawns out there and you'd like to cut the lawn of Darrin's home and you can beat X amount of dollars, he's looking for a great lawn care person.
He's going to buy a goat.
I think we've solved that problem. But
You can buy a goat?
no, I think a goat comes with different challenges.
They eat everything.
Like they eat the fence. At least that's what I
You
understand.
put up an electric fence. He might not eat that.
You get a pre-cooked goat.
Oh, my gosh. Yes.
Anyway,
you
this
probably
is the
would.
IRS Solution Attorney
Yes.
Show. And today we're going to be talking about federal tax liens and how to get federal tax liens released. It's kind of a challenging situation, and it's not always easy.
No. Well, we were talking about this. So federal tax liens, is there different variations of federal tax liens, or are they just different reasons why they are liened?
Well, let's talk about what a federal tax lien is. A federal tax lien is when the IRS files a document, typically in Florida, in your county clerk's office in the official records section. And what it is, it's notice to the world that that taxpayer owes the money. Now, a common misperception is that the tax lien attaches to the property that's listed on the address of the tax lien, and that's not the case. It can be the case, but it's not necessarily the case. So, for example, if you live at 123 Main Street and you're a tenant, you're renting, it doesn't attach to 123 Main Street because you don't have an interest in that property, in that apartment that you're living in. But if you had a mortgage on 123 Main Street and you were buying that from the bank, or God forbid it was free and clear, then of course it would attach, because the lien attaches to all of your property, real and personal, wherever it may be. Now, what does that mean?
Even your underwear.
Yeah, exactly.
We talked about that.
Yeah, it attaches to your real estate. That's what the real property is. And it attaches to your personal property, which is everything but real estate. So literally attaches to everything. The very second that it gets filed and clocked in at the clerk's office, it magically attaches to everything you own, so that your socks in your underwear drawer are actually liened at the moment that the lien is filed with the county clerk.
So what about late fees and interest and all that jazz? Does it just continue to accrue no matter what? And does it matter what type of lien it is?
Yeah, typically, well, there's only one kind of federal tax lien. I think there's state tax liens too. And so that's a different, it's similar, but it's a different issue. Federal tax liens, there's only one kind. And typically on the face of the lien, there will be a balance for each tax year, where there's a balance due, and there will be penalties and interest included on that lien, and penalties and interest will continue to accrue. Now, what happens if let's say you owe, there's $50,000 on the lien, and you've been in an installment agreement for years, and now you only owe $10,000, and now you want to sell your house, and you want to get that lien paid off at the closing. Is it $50,000 or is it $10,000? Well, the answer is it's $10,000, because you've been paying on it. Now, it could also be that you have a lien that says $50,000 on it, and you're trying to get it taken care of at closing of a house, and you haven't been paying on it, and it's not $50,000. It's kind of a rude awakening for some people. It's $67,000 now, because their penalties and interest have been continuing to accrue.
So when you're in the middle of an installment plan, do those stop, those penalties and interest, or they keep on going?
Well, interest really never stops, so that's one thing. And the penalties are slowed during the time that you're in an installment agreement.
They should be. If you're cooperatively repaying, that would make sense.
Yeah, and right now the interest rate is 3% that the IRS charges on unpaid balances, which sounds kind of reasonable, right? I mean, 3% is pretty low, except for the fact that it's compounded daily, which makes it effectively much higher than 3%.
Yeah, you have to actually look at the math on that to totally get it.
Yeah, you actually need computer software in order to figure that out, but it's higher than 3%. That's fair to say.
So federal tax liens, are those always just unpaid tax return balances, or no?
I'm trying to think of an instance where it wasn't an unpaid balance, and I really can't think of a situation where. So,
like other types of things, like payroll taxes, for example, those are state taxes, not federal?
Well, no. If it could be an unpaid. You're right. It's not unpaid income tax exclusively. It could be unpaid corporate income tax, or it could be unpaid payroll tax, or it could be a trust fund recovery penalty, which we don't talk about much on the show. But
no.
A trust fund recovery penalty is basically unpaid payroll tax that has flown through a process back down to the individual who was in control of the company at the time and didn't pay the payroll taxes. So it's essentially unpaid tax of some sort, or penalties, to the IRS, and that eventually gets liens. There's a variety of other penalties, like preparer penalties and tax protester penalties and frivolous filing penalties and things like that ultimately can be liened. But basically, a federal tax lien is unpaid debt.
So are those usually hard to get released? Like they don't want to let go even after they're paid?
Well,
if you see it's one of those things that lingers, like, yeah, I paid the balance, but I actually owe more still.
If you think about what a lien is, it's doing a job. I'm not on their side. I'm just trying to explain what the concept is. The lien's job is to be noticed.
Placeholder.
Yeah, it's to be noticed to the world that you owe this debt, so nobody jumps in line ahead of them and gets paid off earlier. Now, that doesn't always work, but it works pretty well. And it's filed to be sort of a thorn in the side of the taxpayer, to get the taxpayer to deal with the situation somehow. I can tell you, having met literally thousands of people who have tax debt, if there wasn't a tax lien, there wouldn't be near the motivation to take care of it. That the tax lien hurts people's credit. It keeps them from buying and selling houses in a sense, in most cases. So that lien is there doing its job. And so the IRS is naturally pretty reluctant to release that lien, because there's another issue too, is that we don't talk about this all that much on the show, but taxes can, in certain circumstances, be discharged in bankruptcy. And if there's a lien there, then the lien can attach to their real property, for example, and things like that. But if there's no lien there and you go through a bankruptcy, you might be off scot-free. So
Craziness. Yeah, is that an oversight on the IRS part?
Sometimes. Sometimes they just didn't follow the standard operating procedure. Sometimes they've agreed to release the lien for whatever, or withdraw the lien for whatever reason, and there's a distinction between those two words. But there's a lot of taxpayers in the United States, and there's a lot of taxpayers in the United States that don't file and pay their taxes. So just the sheer numbers that they're dealing with, there's going to be some people that fall through the cracks from time to time.
And I think when we come back, we should talk about the difference between, because you just slid that in there really quick, release to withdraw. So we should look at the differences between a release of lien compared to withdrawing the lien. And is satisfaction one and the same, or is that a third category?
Well, satisfaction is going to be, it's kind of a third issue. So let's talk about that as well.
Talk about release, withdrawal, and satisfactions of federal tax liens when we come back in just a minute. You're listening to the IRS Solution Attorney Show. Thanks for joining us today. We're really glad that you're here. If you have a question, we are on air, and you can get us at 888-404-1010, 888-404-1010. Pat George back there will grab your call, and Darrin and I will jump in. We'll be back in a minute.
And we got to talk when you come back about our trip to Key West.
Welcome back. You're listening to the IRS Solution Attorney Show. Thank you so much for sticking around with us through the break. We appreciate you chiming in. We try to have a little bit of fun here and talk about some other stuff besides just IRS solutions, because we know, it's morning radio and not everybody has a tax problem, but when and if you do, or if someone does, I would highly suggest that you run it past Mr. Darrin Mish. You can get him at 888-GET-MISH.
That's 888-438-6474. Just last night, I had a Facebook friend who listened to one of our train wreck segments that's at the end of the show where we talk about success stories, essentially. And his comment on Facebook was, Darrin, you make me wish I had a tax problem so that I could come and hire you so that you could fix it. So if we're doing that, I think we're doing a pretty good job.
Yeah,
because this is not
engaged.
like real fun stuff. It's a lot of this is kind of esoteric kind of.
I was watching a talk show on television, and the question came up, and I said, I got to ask Darrin this. And I said to myself, it's self-explanatory what it is, but maybe you can elaborate a little bit. But they said, what's the difference between personal tax and corporate tax?
Oh, well, I mean, it's pretty self-explanatory,
That's what
right?
I thought. But
So, tax ID.
It was pretty elaborate.
So I would say that I'm a kind of a simplistic guy. I try to boil things down to easy terms because, I think it's easier to understand things that way.
Yes. Yes, keep it super simple.
Yeah, because, this is radio. This is going to be kind of hard if I make it too boring, right? So personal income
Plus,
tax
no
is...
one's going to want to listen.
It's what individuals owe. It's what human beings owe. It's what John and Mary Smith owe. And if John and Mary Smith have for example, a C corporation, and that C corporation has its own tax liability,
EIN.
that's going to be, the tax liability attributable to that corporation. And what's really important is if that corporation, if that C corporation doesn't pay its taxes, then there's no recourse against John and Mary Smith. Could be the only shareholders.
But they're going to have an EIN, not just a social, so it wouldn't apply to like a sole proprietor that's filing everything under their social.
Does not apply to sole proprietor, and probably doesn't apply to an LLC that's being taxed as a sole proprietor. Right. And in Florida, does not apply to a single member LLC ever. So
why is that?
That's a different show, but there's been some really bad Florida Supreme Court cases that have decided that there is no actual personal liability protection for a single member LLC in Florida. So I do not put clients into single member LLCs because it's just not a great idea. There's just so much more case law for corporations, specifically S corporations as opposed to LLCs. That's the route
so
we're taking.
we're going to have to talk about that.
Yeah, at some point in the future.
For another show, yes. Because, for example, somebody like me, they keep changing this, right? The state of Florida keeps changing it. But if you want to work under another big corporate umbrella and they pay you corporation to corporation, you cannot be anything other than My Name LLC or PA. That's it.
Well, I think that's one of those restrictions that you're falling under for real estate brokers.
Right. But I'm saying, you just use that example of single member LLC and not having that same protection, even though you're taxed as a corporation. That's interesting.
Yeah. So for lawyers, it's the same. It's kind of the same principle as for realtors. We don't have any liability protection anyway. No matter how we're organized, we're on the hook.
The moment you take the bar, you're exempt.
Which is why we have to have lots of liability liability insurance. Although lots of lawyers, maybe even most lawyers, don't have any liability insurance, which is kind of scary.
Is it expensive for attorneys?
It can be. Depends on your practice area and how bad your track record is with complaints and things like that. After
Imagine criminal defense attorneys don't have very cheap liability insurance.
Actually, it's pretty low because the bar to sue, to be able to prove malpractice is that you would have prevailed but for the malpractice. So you have to basically prove. So you're the criminal defense client, right? And there's been malpractice. What you have to prove is, well, I would have been found not guilty except for this mistake you made. Well, that's a pretty high bar.
Yeah.
So, yeah, I don't think criminal defense attorneys' malpractice insurance is all that high. After the real estate market crash in 2008, and actually after 9/11, when money markets got tight, the cost of insurance went up because it has something to do with how much money is available and things like that. So, even though
makes sense.
We're in a non-related field, had nothing to do with 9/11, for example, the premium spiked, and I think it was because they're trying to the big money companies in the country were trying to recoup some of their losses.
Isn't that insurance in general, though? Like that whole, I won't even get on this train wreck, but the whole Obamacare stuff, like going up next year. Anyway, so we left off at a tax release versus withdrawing a tax lien versus a satisfaction of a tax lien.
Okay.
What's the differences in all of those? Because they sound one and the same.
Okay, so
Don't
let's talk about a satisfaction first. A satisfaction is where you've paid off the debt. So the lien has technically been satisfied, but that doesn't necessarily mean that it's reflected as satisfied in the court records. I've never seen a satisfaction filed in a IRS tax lien in a clerk's office, but I can certainly think of situations where the lien has been satisfied. There's a couple different ways, right? I mean, there could be you could pay it off. That would be a satisfaction. You could outlast the statute of limitations, which is actually going to be one of the topics of the train wreck of the week this week, where there's a 10-year statute of limitations for the collection of IRS tax, and after that 10 years expires, then the debt is no longer legally enforceable, and the lien has to be satisfied at that point. And then we'll talk about the difference between release and withdrawal here in a second. And then the third way could be maybe you filed an amended return, and the amended return took care of the balance of the lien. Does that make sense? So,
yeah.
Let's say you filed a tax return.
Forgot your deductions and then it covered them.
Yeah, and then you went back and you fixed the return and then it wiped out the liability. That would also, technically satisfy the lien.
Do you ever see it where it's filed as a straight up error? Like just not accurate? Like this tax lien was not mine, should not have had it filed, don't even know why it's here.
I have seen a couple instances where junior and senior got, mixed up. So you got John Smith Sr. and John Smith Jr., and I'm not even going to pick on which one's worse. But in this case, like one,
it happens,
one's law abiding or pays his taxes, doesn't have a tax debt, and the other one doesn't. And then somehow the socials get screwed up, and it makes it even harder if they live at the same address, because that's happening more and more now. So you might have a 30-year-old son that's living at your house, and he has the same name and different social security numbers, obviously. But
and we used to see mixed credit a lot with same names a lot. Not as much anymore, but we used to see mixed credit a lot.
Yeah, I think as computer technology has improved, there's fewer and fewer of those things. That's one of the defenses that you can fight, the IRS, if they file a tax lien against you. It's one of the defenses is that it's not me, or I don't owe this money. And I'll tell you, that's pretty rare because I don't see it very much at all. And it might be that I just don't get those cases, but I don't think it happens that often. So
that's what I was thinking. It was more of a curious question, but.
And then let's talk about what a release is. A release is where it's kind of it's not quite as good as a withdrawal. A release just means simply the lien has been satisfied, or
like it's paid off,
or released in some way.
Well, I guess they could release it if you still owe the money. That's happened.
Yeah,
right?
We're going to talk about some specific examples in the next segment, probably about how you can get a lien released under some special new programs that the IRS has, or actually you can get them withdrawn, come to think of it. But you can request a release, and a release on your credit report is supposed to be almost as good as if it was never there, because it's an indication that there's no longer that debt.
It's still going to show up on there.
It is. It's going to show a lien. It's going to show a release. And then the third sort of area is a withdrawal. And a withdrawal is akin to, it's almost like a pardon. It's akin to, well, we want this to be treated like it was never there. And so a withdrawal is slightly better. Do I think there's much difference between a withdrawal and a release on a credit report? I don't think so. I haven't studied the issue.
Well, if you withdrew it, I would think that they might have to take that off your credit file.
Like the lien was never filed, perhaps.
Because if they withdrew it, like technically that's saying this was reported and it should not have been. And I would say, I would fight that as a removal.
But I've talked to lots and lots of people after they've had liens released and what the effect was to their credit. And for the most part, I don't think there's really that much detrimental effect after there's been a lien.
Because the credit companies don't want to take anything off. Like if you ever talk to anybody that's had to have anything repaired on credit or removed that was an error, it is not an easy process. And we fight them like in the middle of a mortgage process and pay, it's 30 some bucks a pop per bureau to rescore something. And then you get one of these idiot bureaus that doesn't even, you're sending them a letter from the organization saying, oh, this is not late, or oh, this is not owed, or oh, it's paid off, or oh, it was a mistake, and they still don't want to remove it.
Yeah, I've dealt with some of the credit bureaus, professionally, and it's worse than dealing with the IRS, quite honestly. They're all about keeping the negative information and all about letting the good information, go if they decide they want to. So it's interesting. I think that's almost like a quasi-governmental agency nowadays, right? So, because there's so much that the government and banking and regulation all relies upon the credit bureaus. I think they're essentially monopolies, and they're essentially the same. They're a little bit different.
Well, they share info. I mean, their algorithms and how they calculate the score is different, but they all share information.
Clearly. I'm not a big fan of Experian, but that's just me.
To tell you some stories that are not very fun. It happens. But anyway, you're listening to the IRS Solution Attorney Show. Today, our topic is all about how to get that federal tax lien released. Yeah, let's start that one again. When we come back in a minute, we'll also talk about the Fresh Start Initiative because we haven't chatted on that yet. You're listening to the IRS Solution Attorney Show. I'm your co-host, Katrina Madewall. Mr. Darrin Mish is the host, sharing the expert advice from the attorney seat in the room. And if you want to get him, you can catch up with him at 888-GET-MISH.
888-438-6474. Don't forget to follow us on Facebook at the IRS Solution Attorney Show. You can also download our app on the iPhone and Android store. It's called the IRS Problem Solution or Solution. It's the IRS Solution Attorney.
Okay, yeah. Just search for it. You'll find it. Darrin Mish @ that on Twitter.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin Mish.
You sure about that? You still had to think about it for a second.
I did there, just a second.
I'm your co-host, Katrina Madewall, and Pat George is back there doing a great job on the show, producing it.
You ever have those moments where someone asks you how old you are, and you're like, hold on a second, let me do the math. It's getting a little high.
Yeah, somebody asked me that yesterday because my birthday is right around the corner. And they said, oh, you're going to be this age? And I said, yeah. My husband goes, yeah, again. And I was off by a year.
That's dangerous territory.
But he always says that kind of stuff to me, so I don't pay much attention to it because that's just how he just says that like that. He's like, oh, you're 39 again.
I got another question. What about a new president that we're going to have in less than 2 weeks? Do you think anything in the tax law is going to change with the new president?
Oh, that's a vast possibility.
Big sweeping generalization, but I've seen this happen over the last 20 years or so. Generally speaking, what happens is Democrats raise taxes and do less to collect them. Republicans have a tendency to reduce taxes and do more to collect them. So bizarrely, in my mind at least, it's better, probably significantly better for Hillary Clinton to be elected for me in my business than in my family than it is for Donald Trump to be elected, because it's quite likely that she's going to raise taxes. I mean, I don't think she's even really disputing that fact, although not on people who earn more than $250,000 a year, allegedly. But that number has a tendency to slip, And then, but Donald Trump probably would reduce taxes. But I can see the Trumpster really coming after people who owe taxes, can't you? I mean,
well, wouldn't that help you if he's going to reduce taxes and more people start paying their tax or start filing and they have problems? That'll still come back to you.
Well, one of the reasons why I'm in this niche of helping people who have tax problems, despite the fact that I actually do like to help people, and that's the truth, is that my business is good no matter what. My business is good if the economy's good or if it's bad, because
people are always going to have a tax problem.
If the economy's good, then there's people who are actively deciding, I'm going to postpone paying my taxes because the economy's good. I'll just make the money back, and then unexpected things happen. And then if the economy's bad, well, I mean, there's probably even more people who are making the excuse or the decision not to pay their taxes, and so then I get that business as well. So I've been in this, for a couple decades now almost, and I've seen the downturns and the upturns. And when 2008 hit and everybody was going crazy and the world was falling apart, I was doing okay.
Same old thing. Same old thing.
there was
It's the same
probably
thing
more business.
in real estate. There's always going to be people that need to sell and want to buy. Somebody's getting divorced. Somebody's getting married. Somebody's got a blended family. Somebody's house is too small. And a lot of those same things would also create a tax liability.
Somebody's tired of shoveling snow.
Yeah, exactly. We get those a lot.
Speaking of divorce, don't you have a good story of a divorce IRS problem where they were both at the table maybe with you?
I have no idea what he's talking about.
You have to elaborate.
Husband and wife.
Sure.
Tax problem.
Sure.
Going through a divorce, and you're involved as far as trying to solve that.
It happens all the time. It happens all the time.
That's probably the reason why they're getting the divorce, Pat, because they owe the IRS so much money.
It's kind of a challenging situation too, because if you think about it, there could be a conflict there, right? Because almost by definition, somebody's kind of at fault, right? I mean, it's very rare that only one spouse is, or only, both spouses are equally at fault. It can happen. Like if they decided to make an early withdrawal from an IRA or something, that's kind of both their faults. But if one of the people is, a wage earner and has taxes taken out of their check, and one of the people is a sole proprietor and doesn't pay estimated tax payments, then it's kind of one person's fault. And almost by definition, one of those spouses is going to get stuck with it if they're divorced or divorcing or living separately. If they're living together, then they're both going to get the benefit. But if they split, that's when there's a conflict potentially.
Have you seen anybody get divorced just because they're like, oh, I'm not getting stuck with that $100,000 tax bill?
I don't do family law on purpose because I don't want to be injected into that acrimonious situation. My life is stressful enough. I don't need that extra stress. And God bless the people who handle divorces. I don't know how they do it. But I've been in that situation. I've been in the middle. I try not to take those cases because, quite frankly, it's hard enough to represent the perfect client, let alone the situation where you've got, a couple that's splitting. So they have that stress. They don't communicate well. It's really a lot more like having two clients.
We see some crazy stuff. Like literally, I just had a client buy a property and she's like, oh yeah, we're technically divorced, but we both want to be on the deed, but they're still, you wouldn't even know they were divorced, but legally they are because they had a child with special needs. And then, we go through the process and the lender's like, nope, she's not being on the loan. We don't want her on the deed. You got to take her off. So they made us at the table take her off the contract.
Oh,
because they didn't want her on the deed.
Yeah. There's more and more sort of non-traditional situations going on. There's a lot of people that come in and say that they're married, during their initial consultation. And when I'm discussing it with them, sometimes I get the feeling like maybe that's not totally accurate. And I'll say, well, are you guys actually married? Like, do you have a marriage license? And they say, oh, no, we've just been together for 20 years. Isn't that common law marriage? Answer, no, not in Florida. Might be in Texas. I think in Texas is like 3 days.
Oh, it doesn't take long in Texas.
But anyway, I think we better get back to talking about tax liens.
We're going to talk about the Fresh Start Initiative.
Okay, so the Fresh Start Initiative is actually pretty cool. When it comes into what comes into play with regard to federal tax liens is if the taxpayer owes $25,000 or less and enters into an installment agreement and enters into a direct debit installment agreement, that's where they're automatically debiting your bank account for those payments. After you've made 3 payments, then you can request that the IRS withdraw the lien, and it's not discretionary. They don't really have any choice.
They
have to withdraw the lien at that point in time, and that is done.
So that's pretty cool. So if you've got really this tax lien thing following you and hovering over your head, and you need to get rid of it so that you can sell, buy, refinance, whatever, it's pretty easy to do that. It sounds like once you get that installment agreement in place. Right.
That's on a Form 12277. That's a Form 12277 application for withdrawal. It's not discretionary if you owe under $25,000 and you've made 3 direct debit installment payments. So that came out a couple of years ago, and I was kind of skeptical when I first heard about it, but it sure is a lifesaver for a lot of people. Let's think about a context where it might not exactly fit, but you can make it work. Let's say, you're trying to buy a house, and you've got this lien on your credit, and it's kind of the only thing that's holding you up, and you owe $32,000. Well, might make sense to pay that thing down to around $25,000, get on that installment agreement, make the 3 direct debit payments, and apply for a withdrawal.
Is that the cap? Like, why would you have to pay it down to 25? What's the deal with that?
That's the limit. The IRS doesn't want to be left holding the bag potentially for people who owe more than $25,000.
So they'll only give you a payment plan if it's less than $25,000?
No. They only automatically withdraw the lien if you owe less than $25,000.
Somehow I misheard that.
Yeah, if you owe less than $25,000, you made the 3 payments direct debit, they will automatically well, after you ask them, they will not deny you an application for withdrawal of the tax lien. And that's pretty good. You know,
They don't do it automatically, though. You have to ask, I'm sure.
They
right?
absolutely do not do it automatically. That's why you need to use that form 12277 so that you can get that thing withdrawn.
Gotcha.
So let's talk about a couple other ways that you can get liens released. You can do what I call a traditional request. You have to look up the address for the lien unit. It's in Cincinnati, Ohio. And if you've satisfied the lien, so we talked about that in the last segment, but different ways to satisfy it. You know, you've paid it off or it's no longer enforceable because the statute of limitations has expired.
Which is?
10 years from the date of the assessment of the tax. You can go ahead and ask the IRS to release that lien. And you send a written request to the lien unit in Cincinnati, and they 9 times out of 10 will go ahead and release it.
How long does that take? What's the timeline on that?
30 days or so.
Okay.
I've been having some trouble lately getting, righteously, releasable liens released. The IRS is becoming more and more of a stickler. Here's kind of a funny situation.
No, it's my lien. It's my lien.
That. Had a guy who actually works over at the Florida Aquarium had a tax lien. And this is a really old problem that the statute of limitations had expired. I went ahead and released requested a release. Well, the IRS sends us the release form, okay, the certificate of release, but that form has to be recorded at the clerk's office for it to be of any legal effect, right? I mean, because the lien is notice to the world that you owe the money, and the release is notice to the world that you no longer owe the money, right?
Can you record it if they gave it to you?
Well, this is part of the story. So we get the release, and the IRS doesn't record it. So I tell the client's kind of complaining about it. I said, go down to the county and record that thing. He goes down to the county, he calls me from there. He's like, the clerk will not let me pay the fee and record this. So we're stuck, right? So I basically had to do
I think it's like a made-up letter or something?
That's what the clerk's opinion was. Well, it's not officially coming from the IRS, so it can't be. We're not going to let you file it. So I had to go through back channels and complain and basically force the IRS to record the stinking release, because what good is a release that is not recorded? I mean, that's just absolutely
it's like
ridiculous.
Getting a deed to a property, it's not recorded. It doesn't mean it's not valid, but
exactly.
kind of want notice to the world that it's there and you're the owner.
Yeah, this particular client, one of his problems was it's just wrecking his credit, because it was some big number. I don't remember how much, but it was some big number, and it was wrecking his credit, and he's trying to get his life rebuilt. And, he's like, well, I paid you to get this thing released. And I'm like, well, it got released.
Yeah, but
I didn't give him a hard time at all. I was like, you're absolutely right. I mean, that's not a release. If it's not recorded, it's not a release in my book.
So how long and drooling of a process was that to go through those back channels to get them to record it?
I think it's taken us between 60 and 90 days. I have another case, much more complicated fact pattern, too much to go into here, but it's been over a year, where it was an accepted and paid and settled offer and compromise.
And
they're supposed to release the lien automatically within 90 days after the payment of the satisfied offer and compromise. You had two spouses, you had spouses, and one spouse they released and one spouse they wouldn't release. And I had to go, I've been going around and around for a year saying, now look, I've diagrammed this out. You've released it on him. You haven't released it on her. You need to take care of her. And the last word I heard yesterday was they're like, okay, they agree with you. They're going to issue the release. It's like, okay, when I see it, I'll believe it.
Finally, after they finally say yes, that's still another 30, 60, 90-day process?
After an offer and compromise, it's about 90 days.
Yes, that's still not very fast,
Well, it depends on what world you're living in. If you're living in the real estate world where you want to close next week, you're right. That's not very fast.
Yeah, I love the people that want to fix credit while they're under contract. It's always much fun.
If you're living in my world where your average case takes a year or two, then 90 days isn't that slow, right?
Yeah, exactly. It's right on time.
Let's talk about a couple other ways that. So we talked about the fresh start. We talked about the traditional request. We talked about the offer and compromise is going to get the lien released. You can also get a lien release in the context of an appeal. So if the IRS files a federal tax lien, they issue you something called a final notice, or basically a final notice of, it's not a final notice of intent to levy. Basically, they issue a notice that they filed the lien. Okay. And you essentially have up to a year to appeal that thing. And if you appeal it and you can argue that it's not in the best interest of the government, and technically you can also argue not in the best interest of the taxpayer, then there's a chance that they'll release the lien. So
never in the best interest of the taxpayer, is it? Ever?
That's why I said, well, technically you can argue it's not in the best interest of the taxpayer. I have argued that. I have never argued that successfully. because obviously it's not in the best interest of the taxpayer to have a federal tax lien out there stopping them from living their life.
If it could affect their livelihood or whatever their environment is, they might, because if they think there's a chance they're not going to get paid, that could be
maybe a security clearance or maybe things like that. It could be. Just haven't had the right case come along. But if you can argue that it's not in the best interest of the government, then sometimes you get them to release that lien.
So when we come back, we're going to answer some questions that we got on Twitter, which you can get Darrin at Darrin_Mish. And we had some questions. What are the chances of being audited by the IRS? And a few more that we'll answer when we get back after the break.
And when we come back, we got to find out about the crazy thing that happened to you in the checkout line at the grocery store, Katrina. You got to tell that story again.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back. You're listening to the IRS Solution Attorney Show. Thanks for sticking with us through the break. We are glad that you're here. Today's show, we talked all about how to get that federal tax lien released. We talked about the difference between a release, a withdrawal, satisfaction.
So let me add one last way to get a lien released. It's kind of a lien release. There's a process called a certificate of release or a lien subordination. I'm going to lump those in together. That's a situation where you're trying to buy a house, for example, or you're trying to sell the house is a better example. You're trying to sell the house. There's a lien that's attached to the house. It's not in your best interest to keep the house, and the IRS is going to want to get paid something to let you get out of that particular lien situation. So that's a long, complicated process to go ahead and apply for that, but it does exist.
So to give you an example, what the heck you just said, there's a lien line. And so if you can imagine this horizontal line, these little monopoly pieces on the line, there's a pecking order on who has priority. And as you can imagine, the IRS or any type of tax lien is high on that priority order.
Yeah, usually number 2.
Yes.
Sometimes number 1.
So the house thing, what you're talking about is allowing that to supersede or go past or move around in line. Is it pretty simple?
Yeah, for example, if you want to refi, let's say you have a 7% interest rate and you're trying to refi your house and you're trying to get 3.5% interest rate.
You're trying to get some money so you can make that tax payment.
The IRS will usually let you do that, but they have to get involved in the closing. They have to get involved in the deal. They have to make sure that they're getting their money and so on and so forth.
Yeah, that would make sense. All right, so let's answer the questions that we got from some of our Tweeter followers. Tweeter. We should record your chickens. Stacy wants to know, what are the chances of being audited by the IRS? That's kind of a broad range question.
Your chances of being audited by the IRS are absolutely very low at this point in time. I have right now, if you earn between $100,000 and $200,000, your audit rate is 0.65%. It's less than 1%. If you if you earn between 200 and 500, it's about 1.75%, and it goes up from there. If you earn over $1 million, from $1 million to $5 million, it goes up to 6.21%. And if you think about that, it makes sense that the IRS is focusing its resources on the higher income earners, because even the smallest error will result in more money for the IRS. Now,
plus the tax is higher.
Now, my understanding has always been that if you're self-employed, filing what's called a Schedule C, a sole proprietor, and you file a Schedule C with your 1040, your audit rate's actually quite a bit higher. Your audit rate's going to go up to about 5%. And if you're self-prepared and filing a Schedule C, I don't know what the number is, but it's higher than 5%, because there's just so many more opportunities to make, mistakes.
That's exactly what I was thinking, Stacy, was that, it depends on, there's probably different schedules or things that you could file that would significantly increase that chance.
If you're a wage earner and you're just having taxes withheld from your paycheck and that's about it, your odds of being audited are about close to 0. Because there's nothing to audit. They already know everything about you.
That makes sense. All right, and so Joe wants to know, if I'm called in for an IRS audit, should I take my attorney? or should I take my accountant with me? Which that's a very good question, Joe.
Neither, Joe, because you shouldn't be going. That's the answer.
Listen to
See
that.
how I did that?
All right, so
what I think you should do is I think you should hire a tax attorney, and you should send him in there. And when they ask all the questions, the tax attorney, me, will say, I don't know. I don't know the answer to that. I don't know the answer to that. And what I do is I just literally I write down a list of questions, and then I go back to my client and I say, okay, so what are the answers to all these questions? And then we have time to go ahead and answer them. If I brought Joe with the audit to me, here's what Joe's going to do. Joe's going to be singing like a bird because he's going to be under stress and freaked out, and he's going to say things that are not accurate. I'm not saying we're going to lie. We're absolutely never going to lie. But Joe's going to say things in the heat of that stress in that moment that that aren't accurate. Because he's scared, which is totally normal.
What about the accountant to answer the second part of Joe's question? Like, how often should they or could they or would they be involved?
There are some audits where I would hire an accountant to help me figure out, the actual math and things like that. Typically speaking, and I'm not saying anything bad about accountants, we're trained differently. So lawyers are trained to be advocates for clients, to represent a side. Accountants are trained in math,
the numbers,
that there's a black and white answer. I'm a lawyer. I don't think there's anything that's black and white.
Of course.
Everything's gray. Everything's negotiable.
So Joe's question was, should I take my attorney or my accountant? So I think,
Neither.
and I agree with you, but what about his accountant? Would that ever, like if you were representing him?
There are accountants who are good at audit representation. There are. If you think that your positions are absolutely correct and there's nothing debatable in there, it might make sense to bring a really good, very aggressive, very experienced accountant with you. It might. But
I had a tax problem so bad once they advised me to take my bail bondsman.
Oh, stop. So tweet Darrin your questions at Darrin_Mish. You can also Facebook him or call him with them at 888-GET-MISH. We will answer them on the air anonymously or with just your first name.
It's about that time. It's the time for the IRS Train Wreck of the Week. This is the segment of the show where we talk about somebody who came into my office and they're essentially a hot mess. I mean, they were just in a whole bunch of trouble and they didn't know exactly what to do. And by the end, they came out smelling like a rose, or not singing like a bird, smelling like a rose for sure. So anyway, in this case, this particular gentleman
came out better than they started. That's what you need to know.
Yeah, absolutely. So this particular gentleman came into the office and he had some really old tax debt. He owed about $154,000 spanning back to 1999 and 2000. And so if you've been listening to the show, one of the things you might be thinking is, well, wait a minute, Darrin, I thought that was a 10-year statute of limitations. How in the world did he still owe taxes for 1999 and 2000? And if you thought that to yourself, you're right, because that's the first thing that went through my mind when I found out that they were from 1999 and 2000 is, oh boy, I'm like rubbing my hands together. I'm like, oh boy, these things got to be
more than 20
these
years.
things got to be getting close. And so there are a variety of things that can toll the statute of limitations. What that means is there's things that you can do that can stop the statute of limitations from running and even add more time on. But in this case, I think what happened is this particular taxpayer never got around to filing tax returns. And so the IRS eventually filed what are called substitute for returns for him. And then that was several years later after they were due. And that's when the statute of limitations started running. So in this particular case.
Wait, was when he filed them or when the IRS filed them?
When the IRS filed them. So he owed for 99 and 2000. They get around to filing them in 2006. Okay. And so then when I get the case and I'm able to identify, hey, wait a minute, these things are going to expire later in 2016. It was early in 2016 when he hired us to look into it. He owed $154,000 and he had a revenue officer on his back. And so my best advice to him was let the revenue officer levy. Just let them, they were getting, the IRS was getting, I forget, it was a really small amount of money, a couple $100 a month or something. And my advice was, well, if this doesn't get any worse, let's just wait him out. And that's what we did. We waited him out. He owed $154,000. We're going to get that tax lien released because it's satisfied, because it's legally unenforceable. And this particular gentleman, that part of his life is over. He doesn't owe them anymore.
Talk about a weight off of your back. So Darrin answers a lot of these questions every day, and some of the simpler ones too. If you have a question for Darrin or you got any type of IRS, anything breathing down your back, I would highly suggest that you dial 888-GET-MISH.
888-438-6474. Don't forget the podcast that's on iTunes as well as our app. So it's the IRS Problem Solver or the IRS Solution Attorney. Not sure which it's called at this very moment in time, but certainly if you search on either one of those platforms under Darrin Mish, it'll come up. And we have listeners all over the nation and all over the globe.
We're going to have to get both of those meta tagged in there. Thanks for listening this week. We'll be back same time, same place next week.
We're out.